Good morning from Boston. Today's top three things are number one, China, number two, Europe, and number three, the U.S. dollar. And again, these are three very big things. But again, look at the world this morning from China's stock market's perspective. When it comes to Obama or Boehner or anyone for that matter in the political media fear-mongering about a U.S. default, not only does the U.S. bond market not care, but China doesn't care. Neither did Japan, by the way. So overnight, the top two creditors of the U.S. debt would be not caring. And I think that that's a really important point. China, of course, was closed last week. But don't forget that the Chinese stock market hasn't had a down day yet this week. Again, in the face of all the rancor that you see out there, I think that's a very good thing. So we're long of China in terms of China, and we're good with that. Number two, Europe. Now, you'd think that, again, with all the fear-mongering from CNBC to whatever, Teletube network and back again, you'd get something that would scare the European stock markets, but no. In fact, the euro is quite strong, and European stocks continue to hold support. Not only support, but the Italian stock market, which we've been talking about for about 3 weeks, in terms of how impressive it's been in the face of all this, the Italian stock market just hit a new year-to-date high. So again, what say you, dear fearmonger of U.S. default risk? I mean, I'll tell you one thing: there's growth risk, but that's not default risk. And don't make the mistake thinking that they're one and the same thing, because they are not. Finally, the U.S. dollar, which is, of course, the most important thing. You'd think that Janet Yellen, being the new head of the Fed, would be number one, dollar bearish, and number two, gold bullish. Well, think again. The reality is that these things are not operating as consequential currently this morning, at least in that regard. I think what's happening in global markets is that the U.S. equity market got oversold and the market's bouncing. The dollar's up, rates are up, and that's the way that we've really been for the last couple of weeks. So again, that's not the way people think about it, and that's precisely why we think about it. It's in line with our process. Those are the top three things this morning.